All right, it was good, family. It's your boy Royalty Trades. I'm tapping in real quick. Um, Going into this new year, I'm pretty much going to dissect my style of trading for everybody. I know a lot of people have been asking, what do you use when you're trading? How do you see the moves intraday, before it happens, pre-market? And I guess now is a good time to sharpen my skills, but not only am I helping myself, I'll be able to help some of you guys too that likes to watch the videos, see how my style of trading is, and possibly give some tips or some ideas to you guys once you see the way that I do things over here. So once again, I appreciate you for tapping into this video. If you're new here, go ahead and hit the like button. Go ahead and subscribe. I'm gonna try to be more frequent with these videos in 2025. So, this is where we're gonna start. And if you already been here a few times, you already know how I do it. You definitely gonna hit the like button by the end of the video, and hopefully, it's going to be able to make you some money going into this new year. So, first thing first, I want to check my GAN levels. I have a video back showing you guys how I do the whole GAN fan. If you look around and you see these different colors in between the charts and the candlesticks, that is the fan. It's based off Fibonacci levels, and it was used by this guy named WD Gang. So I read a book on him, ended up liking his theory, ended up, playing around with his style for at least half a year now, and I'm liking it. I'm still working on it. Takes a little bit to get adjusted to, but it's definitely the most accurate way for me to be able to trade and take the good entries and good exits that I line you guys up with every day. So once I get the idea of where are my support and resistance levels, support being down here, resistance being up here, and then just knowing how to play the roller coaster of the market that we've been getting lately. I seen the downtrend about earlier this month, and we are getting up here. And so honestly, I don't think I did a good job actually leading swings this month. I got caught up in the roller coaster ride, like I said, the choppiness of the market, the ups and downs, and looking forward to continue to break and push up here in these levels. So I thought at some point we was gonna be pushing 612 and pushing towards 620, and playing to the upside right there. But I actually seen the downside on 12.6, and I wanted to wait until we broke above those highs to take calls. Now, in the midst of it, once we got down here, I'm thinking that we accumulated enough to push back to the upside, but we didn't. So Jerome Powell came in and talked about rate cuts one day, and next thing you know, we're not getting as many rate cuts as we thought that we were next year, and the economy took it hard, and the market never recovered from there. Although we had a few nice runners with Tesla and everything, but once I'm getting the ideal of where everything's headed on my fan levels, what I'm going to do is go to the weekly chart. And from the weekly chart, I'm going to start marking my high and low levels. So I'll play the week before, and then I play 2 weeks prior. I play 1 week, and then that's going to give me levels for this upcoming week. Well, the end of this week and the upcoming week. So right now I'm only taking pretty much the established candle here, and those are most of the time my concrete levels to be able to pretty much make day-to-day decisions on which way I'm expecting the market to go. So right now we have a weekly high here. We have it at 602.46. and I'm actually going to change these green. I'm gonna leave them green, and we have a low of 587.58, and then I'm going to mark the opening and closing prices on the weekly. So we have a opening price here at 590.85, and then we have a closing price of 595.08, roughly. All right, so I'm marking all of these levels on my weekly because these are going to be my intraday levels. Now, historical data, you can be using every single candle's highs and lows to be able to decipher what's going to happen. You don't have to. Even though it gives you more accuracy, it kind of starts cluttering up your charts. So once I got these levels, now I'm looking at this week's candle. So right now we had a open at, is that 591.71 roughly. And what I'm gonna do is I'm actually gonna change that one to white, just because I know, well, no, I'll change it to, I'll do blue. And then here's the opening price here, and then this is gonna fluctuate back and forth because it's still an open candle until Friday. So what I did was I'm marking previous weeks highs and lows, opening closing prices, and then the blue is going to be this week's highs, open, and then we still haven't got a closed candle on pretty much this week until after Friday, so it's still negotiable. So once I get there, I got the Ganfan levels, I got the weekly high and lows, I got the opening and closing prices. Now I'm gonna take pretty much what I like to call a light trend on the daily, because trends can be wiped out easily on the daily chart and you have to constantly be changing it. So what we'll do is we will look for any immediate trends that's set on the daily. Okay, so this one right here looks like a clean trend to follow right here. And that's pretty much lined up with one of my levels of support on the Ganfan already. So it's still a clean move. And when I say levels can be knocked out easily, this was one that we could have started off as an uptrend from here to here. But as you can see, we briefly broke below that level, so that structure's broken, which means we could trade back to the upside, or we can open up somewhere around this 587.58 and then continue down after that and make lower lows back down to here around 583. But once a level is normally broken, I might leave it there for a day or two just to see how the prices react off of it once the pattern's been broken, and then we continue to play on those old levels. So now that I have my Ganfan, I got my levels marked out, I got an immediate trend on the daily. Now it's time to start doing a little bit more detail. So the next thing I have written down is check my 30-minute levels. So 30-minute levels have kind of, I mean, that's been my go-to pretty lately. Reason because it doesn't show too much of it shows just enough data to get what's going on. And for my eyes, it just works better to see the arcs the up and down arcs in the market. So, all right, so this is enough. This is probably about, let me see, Tuesday, Wednesday, Thursday. So, going into January, if we go all the way back here, this is plenty of data to go based off of. So here we are. What we do, what I'm going to do is I'm just going to find the major tops and bottoms, and I'm going to stretch out everything. So I'm gonna start right here, and I'm gonna play. I'll lock out that one. I'm gonna bring this one out. Bam. I'm gonna label this one. I'll do it like that. I'll find this one, and notice how what I'm doing is I'm going with the data from all the way back, and I'm applying it to the future. And like I said, that's just historical data being applied to not really give you exact prices, but it gives you an idea of where we are. And then you just have to get the timing right. You have to find the right cycle and ride the wave. Okay. So I got my 30-minute levels highlighted out to play for the majority, or for the remaining of the week. So once I get that, I like to check deviations just to see how they line up. So I have an indicator that shows standard deviations, and what I do is I look at those to see what type of numbers it is. And you don't have to have an indicator. I normally learn this on your own too, but this just helps if you're new to different tickers and you're trying to learn a price action for it. The deviations show you how much prices move normally within a day. So this, moves $4 to $5 a day. So, well, actually, this has it moving, almost $6 to $7 a day. So maybe the volatility has just changed. I know at one point in time it was 4 to 5, but it looked like it's increasing. So spots getting more volatile. The spread is getting wider. But once I see where the bottoms are and the tops are roughly, and I line them up with my Ganfan levels and then my highs and lows, now I'm starting to get a bigger picture of what we're going to dive into going into tomorrow, going into the rest of the week, where we're going to grab calls. Remember, the green over here, those were bullish, and then the blue is just undecided because it's still an open candle. So if I know I got blue prices, going down, then I know, hey, this candle's probably bearish. But as you see, I got the green increasing, and if this was a bearish candle, then I probably would have marked it another color like orange or something to let me know that it was more of a decline, and green for incline. So now that I have my deviations and I kind of got an idea of what's going on, it kind of looks messy right now. But as we start to dive in deeper, we'll be able to see more details. I'm going to go into probably about the 5-minute. And then you will be able to read between the lines. So this white one, let me make that orange because that was my daily trend. And keep in mind, you can make these colors whatever you want. I normally see this without lining everything out. And you guys are asking me to look at certain tickers and stuff. Um, the couple of minutes that it takes for me to reply to you, I'm not drawing all of this. I'm pretty much just eyeballing it and um, giving you just the best judgment call off of what I broke down so far. But this is mostly for a visual of you guys, for you guys, so you can see what I'm doing on the inside that makes me make the decisions that I make. So now that we're here on a 5 minute chart, I like to check fibs and I like to check ribbons. So I have a 4 hour ribbon, which right now I'm gonna take the deviations off to clean up some stuff, and I'll go to my ribbon. So right now you have a 4 hour ribbon. The blue is your 4 hour, and then this is your daily. Well, this is your 4 hour short, and this is your 4 hour long. My bad. But what I do is I use these ribbons. You can use EMA clouds. You can use regular moving averages, but I like the ribbons or the clouds because you get to see the price action inside of the tops and bottoms, and then actually you see right here this ribbon is coming down on the 4 hour. So once we broke below this 4 hour ribbon on the short side, well, on the long side, we seen a rejection up here once it starts to get above in this supply zone. Now this indicator right here is just called gaps, and you don't need it, but it's just another visual indicator to let you see the gap down levels or the gap up bullish demand levels. So once this gap down, you are already expecting for you was expecting for it to come back down. So once it traded up, you could have played a rejection right here, but if you didn't, it climbed up a little bit above the opening price. It rejected at the top of this 4 hour long indicator, and then it came back down to what we could have found back here if we highlighted the 30-minute chart. Remember these white boxes, clear boxes right here? These are just old 30-minute consolidated levels that we were finding and we were playing to. So we bounced, well, it actually broke here and bounced on the bottom here, climbed back up, and then it rejected at the top of one of the boxes. Keep in mind, all of these are old levels, and we're just using the historical data to pretty much grind it out and predict what's going to happen next. You got to the top, it rejected, it's coming back down, and it picked up on another level down here, and looked like this is actually an old gap down level that we had previously right here. So it actually used this old gap down supply level as resistance over here. It came back down below and it held, and then it tried to trade back up. But since this is supply, since this is where bears were at once upon a time, they're trying to step back in over here to drive the prices down more and breach this daily trend right here to come back down more. Keep in mind the old levels come all the way down to 578, which kind of lines up with the other end of this 4 hour ribbon. So this will pretty much tell me, all right, if we do start breaking down, we got a fan level support here and we have a fan level support here. We should have a rising trend, so we should bounce somewhere around like 580. If not, you could test this bottom level around 578. So once I'm looking at the price action pre-market and I'm seeing where the levels are already heading to, then that's how I'm making my analysis and calling different levels, seeing where the different tops is. And of course, when I post the charts don't look like this. And if you're not on any of these platforms that I'm talking about, I'm talking about my Discord, Patreon, and after hours social app for traders. So these are where all my charts are being posted daily, and you giving you guys a outlook on the market for the day. So like I said, of course my charts don't look this detailed, but this is what I'm judging and basing everything off of. So I did talk about the fib level, which I don't have that indicator up right now. No. And you guys ask which trading view plan I pay for. I pay for the basic one. You don't need a whole bunch of indicators to trade. You just need the ones that you good with using, and make use of those. You get all those indicators, 10, 15 indicators. It's a such thing as paralysis by analysis, which means you're just looking at too much stuff too long, and you can't make a decision because you got too many options. Like, trim down on some of your options, find the indicators that work, makes your vision work, and stick to them. So I got my 4-hour ribbons. Sometimes I look at this awesome oscillator. I almost tore that word up. But an awesome oscillator. And it looks kind of like this. And it's like a MACD almost. And it gives you different spots where the stocks cross up and down. Now it's delayed, so you still have to track the price action and know when to get in and when to get out, because you might get 2 or 3 different crosses depending on what time frame you're looking at, or you just could get chopped up and a big move doesn't make them till probably what this is 12:10, and the move really didn't step in until 12:19. So you have to use all of these different indicators. If you do use them, you have to use them in confluence, and they're supposed to help you make a decision based off of what you already see. So I'll check this to kind of see which direction this is headed to, and then I'll be able to judge based off the price action on there too. So right now, if you look at my chart, yeah, it's colorful. I got a lot of visual stuff going on, but guess what? Once I break it down, I know exactly where the market should be headed if I pay attention and I go based off of what I see. I know I have a 4-hour ribbon that's coming crashing down. So we have a old marked level here, 594, 591, 590. So those are going to be my resistance levels. Because if we coming back up and you know that you have a ribbon here and a ribbon here, well, that's a long way up. So at some point, prices have to become exhausted and reject. So naturally, you will want to play calls anywhere in here. Anywhere off of these support levels, you will want to play calls back to the upside, back up to the rejection spot. That's normally how trading works. Sometimes you get it, sometimes you don't. So we're on the 4-hour chart. As you can see, once it broke below these ribbons here, it found support around an old level. Initially, you will want to buy once you get to the bottom of a level. So you'll want to buy here, and you'll place a stop loss for the move back up here. But since whatever happened, I think it was the Jerome Powell speech, a bounce. It didn't bounce here, and it finally bounced where it had an overlapping area, which showed more stronger support. So you would have grabbed calls here each time, and you would have played it back to the upside for a day trade or a scalp. And this day, we just had a hell of a open down here. And if you played it through 1, 2, 3, 4 levels. Would have been a hell of a payday. But this is what you have to do to see a clearer picture of the market and know how to pretty much look and see what's going on. Now, this is kind of like a Rubik's Cube. You can sometimes skip steps if you know what you're looking at, and you can solve the problem, solve the puzzle a whole lot faster. Um, I normally only keep up my gaps. The rest of it, I don't need. I'll play the price action based off of what I've already got marked. Um, like you see, once we gap down, we seen support, which is the green price tickers, become resistance. And like I said, I would have played puts here. And if I got stopped out, I would have played puts here. And what are you playing? Once it gets up here and it rejects, you playing puts down to 585, and you playing puts down to 584. If you get stopped out, you catching it at the next level that you have marked at highs and lows. If this high would have been broken, then you probably would have took off up to this next level and probably rejected up here. But since it didn't have enough steam after being sold off here, you watched it come all the way up. You could have took your puts at 590, play with the stop loss, and then watch it all come crashing back down. You would have took profit here, and then you could have took your re-entry there and back down. But how I would have played it, I would have took it here. I probably would have got stopped out, took another entry here, and then we would have got all our money back as it would have came back down crashing, and I'd have been looking for an actual price target of 583 or 584. So that's how I'm gonna start marking up my charts and sending it to y'all for now. I'll probably get a better color coordination with these different high and low levels, consolidated levels, to that way it doesn't drown out the charts too much. But once you see it zoomed out like this, then you guys will be able to see the highs and lows better. I'll be calling for a rejection here. Be looking for puts down in here. Going into tomorrow, depending on how we open, I will still look for this to be a rejection spot, and then anything above here, I think we coming down until 595 can be broken. So, like I said, depending on tomorrow, we may open. I'm hoping flat. But lately, as you can see, gap down 1, gap down 2. I wouldn't be surprised if something crazy happened. Okay, so Bitcoin still is kind of at 94. So I think it's flat from where we opened it. So I normally look at Bitcoin to see what we got going on, probably headed into the new day. But it's still looking kind of consolidated and neutral. But when you're trying to understand the cycles of the stock market, this is how you do it. Anything that drops, you're looking for levels for it to hold. And then anytime it runs up, then you're looking for these levels to reject. And you can see a movement like here, up to here, down there, up to here, or it might hold here and consolidate and move back up. So you have to look at the bigger picture. Like I said, the 30-minute shows you the best picture, or it shows me the best picture, and I can kind of just get a better view of what's going on. Some people are calling this a head and shoulders play. I don't know if they said here or here, but this isn't, to me, this isn't a clean head and shoulders. Yeah, a elbow, but it ain't a shoulder really. Um, a shoulder will look more of a hold here, another retest up here or down here, and it rolls over back to the downside. And below this level right here would be your breakdown. I always say from the head to the bottom of the shoulders gives you an idea of where prices are supposed to head if you mark it right. And it's actually not straight. All right, that's better. But yeah, from the top of the head to the bottom of the shoulder, you bring the line down from up here and you see where it brings you down to, which in this case, if I take this and slide it over, it'll be somewhere over here. Yeah, it'll have to be somewhere over here. That would just make sense. Because what I think eventually we're gonna have to play up into this gap fill. You might see something like this where it comes up above the supply level and it squeezes out. We could see something of the same nature here. And it comes up, squeezes out, it comes back and it trades up into supply over here. And then from here, anything above this 600 level again, we'll see prices roll back down, and then we'll see it come around here and then drop. And that'll make for a shoulder, and then another fall. So that's how my outlook is, because we still haven't filled this gap down here completely. This is a partial fill. This is at 577.05, and guess what? That's the bottom of where this lines up. So eventually this gap right here is gonna have to be completely filled. You'll just have to see how it lines up. And this is why the market is getting so crazy lately and consolidated, because you can't really see how everything's gonna play out. But I'll do one more on the Qs. This is how you guys see the charts. As you see, I got my daily line already marked out, and it has been breached. Yeah, it's already been breached. So, yeah, now that that's been taken out, that wasn't even 100% straight. Okay. So that's my light trend on the daily. Going into the 30-minute charts, we can see that the trend was briefly broken here. It broke down and it came and retested the top. That's what makes me think it might come back down, but I mean, it can happen like something over here where it eventually breaks back to the upside. But once we get on this 30-minute chart, then I'm watching to see where are we heavily consolidating at. So I like a level. I hate to do it like that, but that's just the safest way to do it. Because I got a retest here, and it's lightly holding on this trend right here. But I got that. And then I'm going to take I'll take that one. I'm not really gonna count this one because it was too choppy and it was kind of an uptrend. I will mark out this one. And I try to keep all my supply and demand levels horizontal, and then I like to angle all of my actual trend levels I like to buy off of. We got another one here. And then our last one to be here. Alright, so I pretty much got what I like so far. Yeah, I like it. I'm gonna ride with it. And then I'm gonna go into my 5-minute charts and start to look at how the price action is behaving to these previous levels. So far, if we are going off of the data that we just collected, we could go down even further to about 507. And if we break below that 507 level, we could see a sell-off down to a 489.90, which that kind of lines up with my support here. If we can recover, prices can come up, but with supply right here, supply up there, either you're gonna get a low volume squeeze to get the bears out of there before coming back down, or you're just gonna see another immediate rejection above this 519 level as it continues to fill up supply levels here. You'll watch puts anywhere above this 525 level and look for prices to roll back down. If I don't see a gap up, or if it's not any gap ups as this trades to the upside, I'm almost positive it's gonna come back down. It doesn't always, but this is where I think somebody asked me a question. Do you follow your TA, and when does a trader's instincts kick in, like your gut feeling? Well, my answer was it kind of starts to line up after a certain while, because the stock market does the same thing over and over. It just does it in cycles. So if I see the prices start breaking up and I say, all right, it's supply right here, we're gonna sell, we're gonna buy puts right here. Well, we saw that it rejected, but it went down a little further to grab more buyers. So next time, since it has a little bit more buyers than this time right here, since it has a little bit more, then that means it's gonna have a little bit more steam to break above and push to a higher level also. Again, a little bit more steam to come back and push back up and try to fill this up. So once it runs out of gas, guess what it has to do? It has to come back and it has to try to grab some buyers here, grab some buyers here, and you might have to try to grab some buyers down here before attempting it to go back up again. If it doesn't have enough, then that's when we just see it fail. If it comes back down here, I'm definitely looking for it to fail more, because each time it's gonna have to grab a little bit more in order to try to push back up and create new highs. It's just too much selling pressure to the top. So that's what makes you a good trader, is that you're not afraid to take your same setups over and over. You got to be mechanical with trading. You can't be emotional, because if you're trading against an algorithm and it doesn't care whether a lot of people's buying it or not, it's going to do what the price action is supposed to do once it's set. So you have to do the same thing over and over. You have to be patient and see how the price action is behaving. And then even if you're late, you can still hop in, look for an old broken trend, which it didn't break here. But once it broke here, you plan to reject in between this little wedge right here. You plan to reject back down to at least 507.50. And then you're doing it like that. So I'm not gonna go over a ton of stocks. I just wanted to show you guys what I'm gonna be looking at going into this new year with my charts. I'm still dissecting in my own TA to see the loopholes where I have it at. Um, no matter how good you think you get, you have to continue to stay a student to the craft. And this is my art. This is what I do every day: charts, trading, swing trading. At that, that's what I'm passionate at. And so you have to stick to what you know. Stick to your guns. A lot of people have been kind of bullish on Nvidia. It hasn't really broken out of the trend that is in yet. I always have to look at the bigger picture. So right now you have this descending channel on the 4 hour. Okay. Yeah. So you got this big descending channel right here. And that's what you gotta respect until it breaks. Reject, reject, close rejection. And if you scrolling, I'm pretty sure it's a little level of supply right there to where it broke out. I called puts at the top at like 139. It stopped me out at 140, and the next thing you know, next candle, it flushed, and it continued on to the next day. We have a open gap down here at 119. So earnings is over here, January 25th. So we could continue to see that if this pattern right here breaks, that's a break of structure. And we could see prices start coming back down and making higher lows until this gets filled. And then finally, um, I don't think it's gonna go no lower, but we may see it come down to about 119 before being bought up. And that's just everybody getting in at a discount right before earnings. That would be super convenient for this pattern to continue to hold all the way up into earnings, to where you get in at dirt cheap prices, just so it can blow back to the upside once earnings come around. You get from 119, these trends would be gone. So you probably get from 119 to probably, I'm looking, breaking my charts down. So you got 119, you got room back up here to 150. 152 for right now until a new trend forms that I like to create more uptrends. But as of right now, that's just what I see. A lower high, lower high, lower high, lower high. It gets bought up, earnings come around, it blows back the top off to the upside, 150. It goes to retest highs up here at 153. And then it continues to push on from there. 180 on higher, probably 190 or 200. So that's just how I see Nvidia right now. Too many people anticipating it. Tesla flushed. I feel like I need to go back and look at this. But 30 minutes, it had a good run, a very good run. But look at how it's trading though. It's making nice runs back up, dumping. Another nice run, dump it. It still has one more dump in it. Stock market normally dumps in threes. Same way it runs up. Here's one. Here's two. Here's 3, and it had one more before it dumped off. So just looking at Tesla, you'll do the same thing. You'll line everything up off of this 30-minute and see what's the best levels. Tesla really doesn't have much. It just has an uptrend here. So I mean, it's kind of hard to find a solid support level here because they're so short. The runs are so short. So you just gotta kind of play it, that's why it's hard to play Tesla. Because it doesn't really hold a pattern very long. If I had to pull one out the hat though, you could take this level here, and then we can take, I'll even take this zone right here. But anything else outside of that, you know what? Because it is so volatile, I'll take, damn, that's ugly. I'll take this. The worst thing you can do is try to force what your eyes don't see. So I'll take this. And the rest of this was just a shoot to the upside, so we could see a smooth flush to the downside, or in this case it might just drop like that, who knows. But that'll be how I would be watching Tesla right now. Very, very, very volatile stock. You never know when it's gonna come back to life. Excuse me, but you never know when it's gonna come back to life. So all I can do is watch what I have highlighted for right now. And get rid of some of this just so I can clear up the scenery. Right now, I see this gap right here at 390 wanting to be filled. I wouldn't be surprised if we go ahead and fill that and then retrace back to the upside around the 408. But we had these little small gaps in the price action. You got one here at 360-ish. You got another one here at 334, 333. And institutions are gonna try to get their fills in. You just gotta know how to time it, know when to get into it. As we can see, this was a level of rejection. Once it gapped down, you seen it try to break back above this old structure pattern, and it didn't hold. It came up a little bit, and then once the market really kicked in, you got him up out of there. You seen it came down and support here, and I guess it just got tired of being at them levels, and it wasn't really doing much, so exhaustion kicked in and it gapped it. So gotta be careful with Tesla. And I don't trade it much. When I do, it normally pays, but that's because you just have to see a clear direction on where it wants to go. Like back up here, you would want to short. Up here, you would want to short. Down here, I wouldn't buy just because of how fast it ran up here. It may not be much support here, so it could come down here, and since that's not a big level of demand, it might just feel it, bounce for a little bit, and come on back down to about 373, 374-ish. So I pretty much just covered my pre-market analysis for tomorrow. For the top 4 stocks that I normally do, which is SPY, Nvidia, Tesla. But I will still have an update for you guys in the morning once I see how the price action goes, and we'll be able to line it up from there. But I appreciate you guys tapping in. I hope some of this just lets you know this is a peek inside my thinking pattern when it comes to the market. I always tell people that I can't really teach you how to trade like me, but I can show you what I do, and then I can allow you the opportunity to let your brain pick out what makes sense and then throw out what doesn't. So I use so many different styles. Hopefully something sticks in, if not all of it, and it helps you out throughout your day-to-day trading psychology. I got to get more locked in. I seen these swings when they happen and I didn't pull the trigger or I didn't commit to it. I got stuck in a roller coaster. I took the day trades. I took the quick money instead of just buying in at the tops and holding when I saw it. If you don't see a gap up, when you see supply levels like this, the squeeze may happen and it might be a little dramatic, but it always comes back down, back within those ranges. And as you can see, Tesla loves to overdo things, but eventually comes right back down. It gapped up, like I said, it needs to gap up in order to hold stuff. It gapped up and then it came right back down. So quick little video letting you guys know what I have going on for the new year and how I'm going to be making an attempt to improve my trading strategy also this upcoming year. So like I said, like the video, go ahead and sub. I'll see you guys once the market opens tomorrow. I'm gonna try to make these videos early in the morning. I'm not gonna commit to it now. I'm gonna try it out and I'm gonna see how it works. If I can commit to waking up an hour before 6, I'll give a blueprint based on how the stock market should do for that day, along with the write-ups that I do every morning. So tap into after hours. If you want to make some money and you just want to be more in depth, go to my Patreon. Once you sign up, it should send you over to the Discord, and from there, you can send me friend requests. You can chime in with the chat. You can send me friend requests, and we can talk one-on-one. It don't matter. Just let me know. I'll see you guys in the morning. Peace.